Assalamualaikum and hi, my name is NORHANIS Allysa. We are from Group 10. Today, I will briefly explain our case study report of Motor Takaful, a Sharia compliant alternative conventional motor insurance. This scheme is based on principal mutual cooperation to share responsibilities offering protection without involving elements prohibited in Islam such as riba, gharar and maisir. Next, we're going to look at the background of Takaful. The word Takaful comes from the Arabic root kafala, which means to guarantee. It is a system where participants contribute to a shared fund to help each other in times of need. In Malaysia, Takaful gained popularity in the 1980s after a fatwa declared conventional insurance as non-compliant with Sharia, leading to the creation of the Takaful Act in 1984.
Motor Takaful is a type of motor takaful plan that follows Sharia law and principles. It protects a participant against third-party property loss or damage, bodily harm or death, and loss or damage to a participant's car as a result of an accident, death, or fire. There are three key principles. The first one is mutual cooperation, ta'awun, where participants combine their contributions to support one another during difficult times. Second is shared responsibility, tabarruk, where all participants benefit from contributions rather than making money off the risk of others. The third principle is the Sharia compliance, which Takaful keeps clear components of interest riba, uncertainty, warat, and gambling mindset. Bank Negara Malaysia shapes the legal and regulatory framework of Takaful operations in Malaysia. This is aligned with the conventional and Islamic financial systems, which are comparable to the insurance sector. BNM obtains its authority and legitimacy through the Central Bank of Malaysia Act of 2009, the Islamic Financial Services Act (ISA) 2013 provisions, which replaced the Takaful Act 1984, govern the Takaful sector in Malaysia. Takaful, Islamic banking, and other Islamic financial services are also governed by the ISA, which offers broad standards for Takaful operations. In order to ensure that the Takaful industry as a whole reach Sharia compliance, the Islamic Financial Service Act of 2013 grants BNM the power to manage the statutory duties of the Sharia Committee, the Board of Directors, and the bodies that govern the Takaful operations. Under Section 96 of the Road Transport Act 1987, there is an obligation for the insurers to uphold judgment against insured individuals for third-party risk. Insurance companies must compensate for losses or damages resulting from accidents involving their insured automobiles, although the insured is at fault. The purpose of the section is to safeguard other people who are hurt in traffic accidents brought on by insured drivers. In the case of ATHIRAH General Takaful Berhad and Muhammad Khairul Irman Muhammad Izin and others, a motor vehicle and a motorcycle were involved in an accident. The first defendant bought a Takaful certificate which was issued at 3:49 p.m. The Kuala Lumpur High Court stated that the Takaful certificate was deemed to be issued at the time of issuance rather than at midnight. This shows the significance of accuracy in timing when it comes to enforcing a policy. The accident happened before the issuance. Therefore, ATHIRAH was not responsible for any claims arising from the incident.
As an authorized Takaful operator, Zurich Malaysia offers Sharia-compliant motor protection plans tailored for car owners and motorcyclists. Its main product, ZAC Driver Takaful, provides comprehensive coverage against vehicle loss or damage due to accidents, fire, theft, and third-party liabilities. It also offers unique benefits such as a 10% discount for low-risk drivers. Zurich Motor Takaful operates under the Wakalah model, where members contribute to mutual risk pool, tabarruk, and may share in any surplus if no claims are made. ATHIRAH is Malaysia's leading Takaful provider, offering Sharia-compliant motor Takaful plans for private car owners, electric vehicle users, and motorcyclists, built on the Wakalah and Tabarruk principles. These plans emphasize risk sharing and mutual aid.
Moving on to the termination and the beneficiary or hibah aspect. Zurich General Takaful Malaysia Berhad allows participants to cancel their motor Takaful certificate by providing a written notice and returning the original certificate. Refunds are given based on the unutilized portion of the contribution, calculated using a short period or pro-rate scale unless a claim has already been made. Termination may also be initiated by Zurich in cases such as fraud, breach of contract, or total loss of the insured vehicle. While Zurich's motor Takaful plans do not usually involve direct death benefits, participants who add optional personal accident coverage may nominate a beneficiary to receive any related payouts. Next, ATHIRAH General Takaful permits cancellation of a motor Takaful certificate through written request or via its online portal. on the remaining period of coverage provided that no claims have been made. Termination of the certificate can also occur if the participant breached the terms of the agreement or if the insured vehicle is deemed a total loss. ATHIRAH offers participants the option to nominate a beneficiary under trust or non-trust nomination, particularly when the Takaful plan includes additional riders such as personal accident coverage. Lastly, Syarikat Takaful Malaysia Berhad allows participants to cancel their motor Takaful certificate by submitting a formal request and the original document. The refund is calculated based on how much of the coverage period has been used following a short period refund schedule. If a claim has been submitted, no refund will be given. As for the claim procedures and documentation required, Zurich General Takaful Malaysia Berhad has a straightforward claims process to help customers during accidents or losses. Participants must inform Zurich immediately through its hotline, website or branch. For motor claims, essential documents such as the police report, driver's license, vehicle registration card and repair estimates from a panel workshop are required. The next one is ATHIRAH General Takaful Berhad. ATHIRAH's claims procedure is customer-focused and efficient. Incidents must be reported as soon as possible via its 24-hour call center, online portal or a nearby branch. Lastly, as for Syarikat Takaful Malaysia Berhad, Takaful Malaysia provides a detailed and participant-friendly claims process. Upon an incident, participants must promptly notify the company through customer service, branch visit or online via its e-claim platform.
So, what is the difference between motor takaful and conventional motor insurance? Both of these models serve the same basic purpose, but they differ significantly in principles and operations. The first difference is motor takaful is a Sharia-compliant model insurance where it avoids elements that are prohibited in Islam. In contrast, conventional motor insurance is a commercial contract where the insurer assumes risk in return for premiums. The main goals of this model is profit with no ethical or religious considerations built into its structures. The second difference is in how the funds are invested. Takaful operators must invest only in halal or Sharia-compliant sectors like sukuk, halal stocks and real estate, where conventional insurer, however, can invest freely, including in interest-based or non-halal businesses. The third difference is in Takaful, any surplus in the fund may be returned to participants depending on the model used. These reflect fairness and share responsibility. In conventional motor insurance, any profit will go directly to the company and shareholder, meaning that even if the policyholder make a claim, they don't receive any share. In short, motor takaful emphasize ethical, religious value and risk sharing, while conventional motor insurance is profit-driven and based on risk transfer. For Muslim, takaful is not just a better option but is often a necessity for ensuring Sharia-compliant financial practices.
The case of ATHIRAH General Takaful Berhad and personal representative of Fatimah binti Adam, deceased and others centered on the validity of a motor insurance policy. Fatimah, the insured, had passed away in 2016, yet the policy was renewed in her name for the years 2017 to 2018 and 2018 to 2019. In May 2019, an accident occurred involving the insured vehicle driven by Fatimah's husband, the second defendant. 2 motorcycles injured in the accident, which is the third and fourth defendant filed personal injury claim. However, it was only then that the insured discovered Fatimah was already deceased when the policy were renewed. The key legal issue was whether a policy renewed in the name of a deceased person could be valid. The court focused on Section 129 and Schedule 9 of the Financial Services Act 2013, which imposed a duty of utmost good faith in consumer insurance contract. Although the insurer had not asked specific questions during the renewal process, the court held that the duty of disclosure still applied. The non-disclosure of the insured debt was a serious breach of this duty. The court ruled that the policy were void ab initio, meaning void from the beginning, as a deceased person cannot be a party to a valid insurance contract. As a result, ATHIRAH was only required to refund the premium. Sadly, the third and fourth defender received no compensation, exposing the limitation of statutory protection for innocent third party in such situation. The case clarified that legal capacity is fundamental to contract validity and the duty of utmost good faith cannot be waived by silence.
Next, for the recommendation, to improve the motor takaful systems, we recommend 4 key actions. First, increase the public awareness through education and campaign, especially among young drivers. Second, enhance digital access by creating user-friendly apps and websites. Third, offer more flexible takaful packages tailored to different customer needs. And lastly, streamline the claims process to reduce delays and boost consumer trust in the system. In conclusion, motor takaful is not just an insurance alternative, it reflects ethical and religious values. While it already offers many benefits, challenges remain in awareness, accessibility and claim handling. With the right improvements, motor takaful can grow stronger, attract more users and continue to uphold Islamic principles while meeting modern needs. That's it from me, thank you.